Alright, so it is literally like midnight right now, but we're gonna get a little bit of chart time in, just so you guys can understand my model a little bit better, how I backtest, how I work on my trading when I'm not actually in a live market. So we're just gonna go back, do a couple days this past week. I'm gonna show you guys my setups and how my model works, and then just how I backtest my strategy personally. So going back to, this was the first day of this new week, so we have obviously this new week opening gap right here. So I would have marked this out. I actually have messages of me like explaining this whole thing, but we mark out this new week opening gap, and you can see that price respects it pretty well. It passes consequent encroachment, but it does respect this new week opening gap. So if I were trading this session, I would have looked for price to retrace into here, which it did, and then obviously with my model, I enter from CE, so around the midpoint, so like right here, and then I set my stop below either this bearish candle right here, so I would have either set it here, or if you want a tighter stop loss, you can set it to either this body or just a couple points below this new week opening gap. But yeah, we're gonna set it here just for the example, and then obviously take profits are going to be at high time frame draws and liquidity. So what do we see here? We see this draw from the previous week. So we have draw and liquidity here. We obviously have this one here from the previous week when it formed the uptrend, when it changed stage delivery right here. So we see a change of the state of delivery right here. So this shows us that we're in an uptrend, not a downtrend. And we have a bullish new week opening gap right here. So that's what we're entering the trade off of, because it's a bullish PDRA that has a high probability of retracement. So we're going to wait for price to retrace into there, enter from consequent encouragement, target either these, or this previous week high. So let's just say we target here. We're getting 1 to 2. If you want a higher risk reward, you can target eat all the way up to here, which is 1 to 9. So that's very good. But yeah, we're just gonna say we targeted here would be 1 to 3. If you wanted to target the mid range of this fair value gap, you could target here, 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 here. So that is just the basic understanding of how my model works. So we're gonna go into the next day to find another example of that. So we see this trade would have hit. So we have this bullish fair value gap here. Did not get respected, obviously, but yeah, if I were to take an entry, where I would have looked for price to retrace into this bullish fair value gap. Probably would have got stopped out if I took this trade, but this was on New York session, so could have, but yeah, definitely would have gotten stopped out. But as you guys can see here, right, if you would have taken it from here, you would have got stopped out. But there's a second bullish fair value gap on the hourly. And what do we see here? So we see this bullish fair value gap in the hourly, and we see that price draws all the way down into this bullish fair value gap on this 1 hour candle and on this 1 hour candle. So what can we do from this point? Well, we can mark out consequent encroachment, so we can get a middle line in there. Take the border off, and then background, just whatever. But anyways, so we can wait for price to retrace into the zone. And so this is the second fair value gap. So this fair value gap was invalidated, but it closed above this fair value gap. So that shows us that price is still bullish and that we're still in an uptrend. So we close above this fair value gap, but we're still, pushing beneath it. But we can obviously see that we can get an entry from this 1 hour fair value gap, which holds. And luckily for us, our model, right, entry from consequent encroachment, enter from here, stop below the low of the fair value gap, and then we can target either this draw and liquidity here, this draw and liquidity here, or just any other higher targets if you guys wanted to even target all the way up here. So you guys could have gotten a 1 to 12, but we're just going to be a little more conservative. Just so we're going to say we targeted these draws here, got 1 to 9 again with this trade, and then closed up here. So again, we have bullish order block right here. I'm gonna mark it out with a line, right? We see price accumulate, manipulates up here, draws back into this order block right here to fill more orders, and we see that price rejects off of it very cleanly, so we get a clean rejection off of this order block. So we could have taken our trade off of this order block. If you want to mark it out with a box, you can. So we have this order block here, right? Price respects it, taps into it a couple times to fill more orders, and does not does not like draw further into it, or it does not close within it. So we can, if you were looking to take a trade from consequent encroachment, obviously you're not going to get it from there. But after we see that price respects it and does not cross over it, and it's not going to be inversed, we can take a trade when it closes above it. So we can either wait for price to tap it directly, so we can set our limit order right here at the top of this order block, right? Stop below the order block right here. You can set it below this candle, or you can just set it, wherever you feel comfortable. So if you want a larger stop to give the trade more room, you can do that. But if you want a tighter stop to give yourself a better risk reward, you can set it below this bearish candle that started to move up. So we set our stop loss here, and then we can, as I said before, we can target these highs, these previous week highs, but we're gonna say we targeted this high right here, then we would have gotten 125.5 on this trade. And then I know a lot of people said that yesterday's price action was not good, and although I can see why you guys might say that, right? When I was on the charts yesterday, I'm gonna explain the setup that I saw. I didn't take it, but if I were to, this is where I would have entered from. So obviously there was high impact news yesterday, but if you did want to trade that session using my model, right? What do we see here? We see price dumps at open, and then what do we form right here? We see bearish candle right here. I was bullish on the day. My bias was still bullish, so I'm looking for bullish trades. And we see bearish candle right here, and we see a move to the upside, and we close above this bearish candle. So that's not a change of state of delivery yet, but we did close above this, a bearish fair value gap. So that gives us an inversion fair value gap here, right? So that's one confluence. And if we're assuming the price has changed, direction, and we're in an uptrend, we have this bearish fair value gap right here. And as I was explaining in my model before, where do I like to enter from? I like to enter from consequent encroachment in these, order blocks, fair value gaps, inversion fair value gaps. So I like to enter from consequent encroachment, so the midpoint of this order block. So if I take a trade from right here and I'm targeting, previous session highs, so London session highs, and then I set my stop below this candle here, great. If I set my stop below this candle, if I set it, under here, if I set it closer, if I set it below here, that's a 1 to 9 trade, and let it play out for the rest of the day. And so that is basically how I trade personally. And then if we want to go a little bit further, if you want to see more data, we can go back to the 4 hour. We can go to let me find a bearish trade. So let me see, the beginning of this downtrend, we see price sweep, not sweep there. We got a sweep here, so we can scale down to the 1 hour here, look for high time frame PD raise. So we get all right, so this is the beginning of the, sweep downwards, or they move downwards. So we have bullish fair value gap, bearish fair value gap here. So we see price dumps here. We have a bullish fair value gap here and here. So we're going to mark out this one, right? Price taps into this fair value gap. And then we can just take a short from consequent encroachment, right? Taps consequent encroachment right here. So we have our limit order set here, right? We set our stops above this candle, this bearish candle right here, or we have it set above the fair value gap. And then we can either target, this is 1 to 3, we can target 1 to 4, 1 to 5, 1 to 6, 1 to 7 R on this trade, and it would have hit, right? So, or if you wanted to target high time frame areas of liquidity, we have liquidity resting here. So you could have targeted here, you could have targeted here, and yeah, so you would have got 1 to 5, 1 to 6, 1 to 7, it just about. So that is basically how I trade. And then obviously, as I mentioned in yesterday's video, I like to start the days with, you know, just a little bit of journaling, or, you know, just learning a new concept or a new confluence to, you know, adapt to your trading. So that's going to be it for today. That's basically my backtesting session for today. Well, you know, if you guys want to see more about, you know, how I personally trade, or how, you know, how I explain my model while I'm trading, then I can obviously go into that more, you know, in depth for you guys. But that is going to be it for this video for today. I'm going to have something coming out tomorrow for, you know, close to the end of the week. And then obviously the whole weekend we're going to be uploading no trading. But, you know, that just gives us more of an opportunity to get more videos out. So, yeah, see you guys in the next one. And yeah, it's really it for now. So, yeah.